The Taiwanese index, though, is trading with healthy gains of almost close to 1% now.
I think we're pretty close to doing a deal that's good for everybody, right?
Support stands at the swing low of 25,318.
They have cut their AUM growth guidance from 24 to 25% versus 22 to 23%.
25,630 on the Nifty, about 0.25% higher.
What makes us a unique company is one thing is our community building playbook.
Inclusion of CNG as a cleaner fuel in the vehicle scrappage policy.
What the street is more, worried about right now is the abrupt end to this glorious leadership.
The rationale of increasing the share of natural gas in the energy basket is also very clear because it is more environment friendly as compared to petrol and diesel.
हमारी एजेंसियां इस षड्यंत्र की तह तक जाएगी.
It's turning out to be a session where, yes, we have recovered from the day's low, definitely. So in the green for the markets, we have the Nifty, which is up around 44 odd points.
Well, it's a good and a better looking screen, I guess. Better is the right word because, we've climbed a lot from the lows of the morning and we're up 120 points in the Nifty. That was a day so far in terms of the price action from 9 o'clock in the morning. This is closing bell. We'll track the last hour for you. Lots of single stocks we'll talk about. Of course, a big story coming your way in just a bit. And of course, so we are coming to you from the CNBC-TV18 Motorola studios. I'm Prashant. Rima and Surabhi with me here. And Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, it's now a 250-point recovery from the day's low. The day's low today was 25,450, and we're knocking at the doors of 25,700.
Not looking bad at all. And guys, just note the PSUs today. For one reason or the other, for instance, for a Hindustan Copper, it's after numbers. But even otherwise, PSUs are having a nice party today. Look at BEL, look at BHEL. Yeah, that's the one that delivered numbers. As Nalco continuing its good run after its numbers earlier in the week. So overall, NMDC Steel, NMDC, all PSUs are up. Let's pull up the PSU index if we can. That's definitely a very, very green side of the market. Hi, Nigel.
Well, that's right. And we have crossed the 20-day MA on the Nifty as well, which is the level that we couldn't get past yesterday. So for the time being, we are holding about that mark. You like to see that, but I think we're still in a range. We need to close decisively above this 25,700 odd to put us on course to around the 26,000. And the Nifty Bank for the second day running, that's a relative underperformer. It needs to get its act together, get to around that 58,500 odd mark, and then lead the way because today as well it's underperforming. But otherwise, a pretty good looking screen because in the start of trade, the number of stocks that were declining were close to 2:1. Now we're pretty much at even Stevens.
Also the Nifty weekly expiry today.
Yeah.
So the last 1 hour, 60 minutes to go for that. Yeah.
Yeah, and I was talking about PSUs. We put up the CPSE index, which actually put up the Nifty PSC index, which is doing even better. And within that, the defense space is really charged up. The defense index, which is obviously PSU and private both, that one's up almost 2% right now. So just thought I'll add that in terms of trends. Overall, looking pretty good across the market.
In the evening, people will be glued to the exit poll results, Bihar exit polls. I mean, politics has kind of gone to the, the back burner in that sense. And people are not really focused on some of these state elections, but Bihar is going to be an interesting one. And the last phase ends exit polls, and then 14th is when the actual results come through. So we'll see. 120 though on the Nifty at this point. Well, it's an action-packed last 60 minutes coming up here. So let's quickly run you through what's coming up. So start was choppy, not anymore, looking much more steadier. We're back above the 25,600 levels. IT and auto stocks are building on gains. Solid commentary from Bharat Forge, and we'll get you more details on those numbers. And what else? I mean, the mutual fund inflows, right? And I think Surabhi will talk in greater detail about this one, the SIP book, etc. So fine print of the monthly numbers. It's interesting and important data point there. The Bajaj twins are both selling off. Bajaj Finance, and on the back of it, what's happening with Bajaj Finserv as well. So we've been, of course, covering this from the morning. So some more fine print here. Asian Paints will report numbers and Tata Steel will report numbers. So will Max Financial. So some previews coming up in just a bit from now. There is a flash at the bottom of the screen. That's a big CNBC-TV18 exclusive. And we'll have our colleague Yash joining us on it in just a bit from now as we break that story. JSW Steel looking to sell up to 50% stake in Bhushan Power and Steel. That is essentially the big story. Remember, Bhushan Power and Steel was embroiled in all this controversy with the Supreme Court, cancelling and ordering the liquidation of Bhushan Power and Steel. Remember, JSW had won it, was the highest bidder. They got the asset. Supreme Court ordered liquidation, cancelled the NCLT order. Then, of course, the top court went back on its order, and all was clear once again for JSW, which owns this asset. So more details at the bottom of the screen. Stocks, I think, is spiking as we speak right now. Let's just stay with the flashes for 90 seconds more. We'll go across to Yash, but let's just quickly wrap out the trading calls as well with Mitesh, who's with us, and then we'll go across to Yash. Mitesh, good afternoon. Good to have you here. What are your calls?
Good afternoon, Prashant. So I think, the market has bounced back, and, I was saying that we need to get past, possibly head towards 25,757, 800 zone. And beyond that, we'll gain more strength. So I think this bounce back should extend, and we should possibly test 25,750, 800 area. And let's see how the market reacts from there. For the time being, I have two long calls. M&M is something which is breaking out. So keep a stop just below levels of 3,700, which is 36.99 is the recommended stop, and look for a target of 3,790. And persistent is a buy with a stop below 59.40 for targets of 16,100.
Got that. Mitesh, stay with us. I just want to get a view on JSW Steel as well. But let's get the story first, right? Yash is now joining in. Yash, what are you picking up?
So, of course, as you can see the flashes on the bottom of the screen, what we've been picking up from our sources is that JSW Steel is looking to sell up to 50% stake when it comes to Bhushan Power and Steel. This is the same asset which, of course, was under the Insolvency and Bankruptcy Code. NCLT had awarded this asset to the highest bidder, that was JSW. Then, of course, it went into problems at Supreme Court, but finally the asset got awarded to JSW again. So, of course, JSW has rights to this particular asset, and they are looking to sell up to 50% stake, as far as Bhushan Power and Steel is concerned. What we've been given to understand, we've written to the company on this particular query, and JSW Steel has replied to us saying that the company's strategy includes evaluating various opportunities, both organic and inorganic, in India and overseas, including potential collaborations aimed at enhancing scale, efficiency, and global competitiveness. However, we would not like to comment on speculation. Also, what we've been given to understand from our sources is that Japan's JFE Steel at this point of time is the front runner to acquire this 50% stake when it comes to Bhushan Power and Steel. Just a little history. As I said, first NCLT awarded, Supreme Court overturned that order, but very recently Supreme Court flipped on its own order and again gave this asset to JSW. The company, that is Bhushan Power and Steel, has about 4.5 million tons of integrated steel capacity, and as far as JSW's acquisition is concerned, that amounts to about 19,700 crore rupees.
Okay, all right. Yash, just stay on. We've got Aditya Sood also joining in to talk about the market. And of course, this important story, this is pretty big. Aditya, what do you make of things? Because after being mired in a lot of controversy and legal issues, finally the asset was cleared by the Supreme Court again. So what do you make of JSW's strategic intent to part with 50% of the asset, raise some cash in the bargain? I mean, your first thoughts?
Obviously, it puts a value to the asset, I think so straight away, which obviously was a distressed sort of a buyout. And obviously, it is a well-known fact that JSW has a long history of turning around, doing successful acquisitions and buying distressed assets. Yeah.
Would you have preferred for JSW to sort of keep this within its fold, integrated, and then reap the benefits of any upturn in the cycle? Or do you think this way of, getting in, buying the distressed asset, turning it around and selling at least a part of it off for hopefully a tidy sum, would that be a better strategy?
I think so. It is a better strategy from the sense that, there could be a geopolitical angle also. You have seen, just Nippon Steel and Mittal also announcing a very large steel capex in Telangana. ArcelorMittal was going with a smaller 8 million ton capacity. But, clearly this clearly demonstrates the fact that this is one sector which can have a lot of FDI coming into India, quite like financials recently.
And do you like, the ferrous space overall, Aditya? Would you allocate fresh money in the recent past, when metal stocks overall have been doing fairly okay? Where is ferrous in your larger scheme of things? And within that, say if you talk about top players, JSW, Tata Steel, how would you break up the allocation?
I think so. JSW is more inward looking in the sense that, by investing into Tata Steel, you have to essentially take a call on, global steel prices. They are fairly insulated as far as the steel scenario in India is concerned. So I think so in the pecking order, JSW is preferred over Tata Steel, clearly.
Okay, all right. Just to close the loop on this is clearly a big story that's coming in there. But the way this deal is done is going to be quite interesting, because as Yash is mentioning, that they're looking at unlocking value in Bhushan Power and Steel. Just to give you a few numbers, JSW Steel holds 83% stake in this particular asset. The promoter entity holds the remaining 17%. So we'll have to see how much they're looking to sell. Which party is looking to sell how much, and then what happens to JSW Steel's holding in Bhushan Power and Steel that's currently going at an EBITDA per quarter run rate of around 750 to around 800 crores. So ballpark, they're in that vicinity of around 2,600 to 3,000 crores of EBITDA, this particular asset. So how much value they'll unlock? Currently, this asset is a subsidiary of JSW Steel. If the stake falls below 50%, it becomes an associate entity. So various permutations and combinations, the structure of the deal is something that we'll have to track. It's clearly value unlocking in this particular asset, but how it flows back to the promoter and how it flows back to the company, that's something that we'll have to check. So, an interesting deal and a large one, unlocking value in an asset that almost got pulled away from them earlier this year. Interesting developments. Yash, I'll also keep my ears to the ground. Have got various hints on this particular deal. So we'll try to fill you in with the latest, but the structure of the deal will be important to track. That said, let's move on. Bharat Forge, that's in focus post its numbers. Sudarshan joins us to help us out with some analysis on that. Sud?
So in the midst of geopolitical tensions and tariff uncertainty, Bharat Forge has come out with its earnings for Q2 FY26, and those earnings have looked better than expectations on both consolidated and standalone basis. So first talk about consolidated basis, I'll talk about two numbers. EBITDA, company has reported EBITDA of rupees around 730 crore against our expectation of around rupees 612 crore. Margin has come in at 18% versus expectation of around 16.2 to 16.3%. Similar trends have been seen on standalone basis, where margin has come in much higher than 28%, while expectation was around 26%. After that, stock had seen a slight up move. But in the case of Bharat Forge, the main focus remains on the commentary of Mr. Kalyani. Now, after the commentary came, after the first commentary, the stock has taken a sharp knock. It had hit the low of 1314. What did he say? He said North American business, exports to North American business will remain weak even going into H2 FY26. But after that positive commentary came that India industrial business and the ramp up that company is doing in defense business will more than offset the weakness that company will see from exports to North America. And after that, stock has seen a sharp recovery, and currently also it's up almost 4%. And from the lows, intraday low, the stock is up almost 6%. So on the earnings front, beat, outlook, cautious, but slightly on the positive side.
Okay, all right. Thanks a lot for that, sir. Well, Aditya, coming across to you, what's your view on this stock, Bharat Forge, and basically a company that's into a little bit of defense, auto ancillary is their core business, but they've been talking about diversifying as well. Your view?
So I think so. Defense, clearly there is a lot of tailwind today. The only problem that we find in this stock is with valuation. It has been a very richly valued auto anch play because obviously defense is embedded. I think so. The key for Bharat Forge going forward is that at what point in time they look to list the defense subsidiary once it scales up separately, because we have had, a bit of order inflow here from Armenian government also, essentially. So I think so. It is more about a capital allocation play from here on. We want to be very, very focused on valuation in most of these companies, because clearly the auto cycle is very important for Bharat Forge, which is the US classic truck cycle needs to be monitored very, very closely. So our view is that, one has to be very focused on valuation.
Aditya, on Tejas Networks, we've spoken about it multiple times and you've explained the rationale on the opportunity why you like Tejas Network. So, don't want to get into that, but the question is, considering the relentless fall in the stock price, are you still holding on to Tejas? Are you looking to average now at lower levels?
Sure. So, essentially when we first bought Tejas, it was closer to a 400 rupees stock. The stock rallied to 1400 odd. Possibly, the stock has not done well for last 12 months. Obviously, we have seen a very, very sharp fall. The key for Tejas is going to be two critical variables. One is that, when do they get this 15 to 20,000 crore order from BSNL, which is for the 3 to 4 lakh, towers incrementally. That is a key for us. The second point here is that, we continue to monitor the capability of the company very, very critically. Since they have now started to jointly market the Open RAN product in the global market with both Rakuten and NEC, we expect at least 3 to 4 orders to come through, which could be in the vicinity of, $10 to $15 million. The long-term thesis continues to be that, Tejas is a stock that one can easily hold over the next decade. Obviously, a lot will depend. Near-term stock performance is closely tied to, the way order inflow will, sort of pan out. Just highlighting one very critical thing for Tejas. Last year, they ended up spending $80 million in R&D. I clearly struggle to find companies which can spend so much in R&D. Obviously, they'll reap the benefits over a 3 to 5 year period.
So still holding on to it?
Yeah, I think so. Makes sense to hold on or to average. We have been slowly buying the stock as well.
Okay. By the way, those are interesting comments coming in from the Vodafone Idea analyst call. The company is talking about discussions ongoing about those AGR dues. Now that the court has clarified that the scope of this relief, if the centre so chooses to grant it, doesn't have to be just 9,500 crores. It can go up to, reviewing the entire AGR demand itself. And the stock has done well. Pull up a longer chart. This is today. For those who have had the grit to trade Vodafone Idea from about 6.5 rupees in I think it was August, to about 10 and a quarter today. So it's been an up ride, but not one without volatility. Very quickly, last word on this, Vodafone Idea. Any thoughts before we let you go?
Very difficult to have, strong views wherein you have seen a lot of dilly-dallying from the Honorable Supreme Court. But I think so now we are in relatively better territory since, the court has mentioned that, the ball is in the court of the government. I think so structurally we are very, very positive on the prospects of telecom. But one thing is very, very clear that there needs to be some capital infusion in this company. In fact, we like Tejas on this theme. Vodafone is obviously, quasi-owned by the government of India. And we believe that there is a huge push towards, using indigenized equipment in the telecom sector.
Interesting. Let's see what happens. You're right, but at least it seems to be now, all clear from the courts. So that's one piece out of the way. Thank you for joining in, Aditya. Good to get your perspective on all the stocks that we've discussed. Well, with that, let's quickly move on and figure out how the FNOQs are shaping up. Today is Tuesday, so it is weekly expiry. Nigel, how's it looking?
Well, the Nifty was trading above the 20-day. In the last few minutes, there's been a bit of a, big move, seesaw move that we saw there. But on a closing basis, the bulls will want the Nifty to close above that 20-day. So that's the important mark because yesterday as well, we couldn't get past that. Today, for the second day running, the Nifty bank that's actually been leading the way. That is a relative underperformer in today's trading session. So that underperformance is actually hurting. Otherwise, we could have been trying to scale higher highs in today's trade. Moving to the options data, interesting piece out there. 25,650 put, 25,600 put. Both of them are fairly active in trade. But on the upside, the 25,725 is going to be a bit of a resistance mark. I say this because the 25,700 call, well, that is very, very active in today's trading session. At the start of the day, the premium is around 25 rupees. So that's why the 25,725 mark becomes important. On the downside, 25,600, that should hold going by the kind of put writing you've seen at around the 25,600, 25,650 mark. Stocks in focus, Vodafone Idea, the one that we're just talking about. Come in for a bit of a short covering bounce out there. Stock up, open interest down out there. BEL in line with, a lot of these public sector units that are doing well today. That as well has come in for a bit of a short covering bounce because that stock as well has popped up in trade. And there is signs of fresh buying on Bharat Forge. So that one is seeing a huge open interest build up, particularly in the last 1 hour or so. And the stock is well up 4.5%. And finally, Bajaj Finance. The stock is down. It's moved towards the low point of the day and the open interest has swelled up as well. So some shorting is what we're seeing on this counter. Net, close about 20 DMA, something that's high. And the Nifty Bank's underperformance, well, that's something that's plaguing the bulls in today's session. Back to you.
Thank you very much for that. Hindustan Copper is another stock reacting to numbers. The stock has surged close to about 7.25%. Get into a break. On the other side, we'll get chatting with Alok Agarwal of Alchemy Capital Management. Stay tuned.
Welcome back. Okay, so we've been talking about all the mutual fund trends. Let's look at some specifics now. The inflow numbers that have come in for the month of October are a mixed bag. a slight dip coming in equity flows, but it's not looking too bad. First, on the big headline number itself, we've seen about an 18 to 19% dip in the total equity flows that have come in at just under 25,000 crores. However, when we talk about equity flows coming down, guess what's shot up? Flows in hybrid funds. That's clearly telling us that investors are getting a little more savvy and are looking to diversify their bets away from pure play equities as well. If you talk about hybrids, then that's what I'm talking about. The inflows have picked up once again to that level of around 15,000 crores. And earlier in this year as well, we've seen hybrids pull in a huge amount of capital. While I talk about hybrid funds, let's look at MAFs, or the multi-asset allocation category. These are funds that invest, across fixed income, equity, and commodities, including commodities like gold. And they have drawn in a very decent amount of money at about 5,300 crores. Speaking of gold, the flows into gold ETFs tell us that investors are still chasing price. If you thought that those highs of over 1 lakh rupees for 10 grams would scare people away from investing in gold, no. As the price of gold has rallied, so has the money flow in gold ETFs. In September, that number was as high as 8,300 odd crores. It's come down slightly, but at 7,700 crores, it's still nothing to laugh at. So gold ETFs pulling in a huge amount of money. Now that brings me to the rest of the equity categories. So since we're talking about a month-on-month deceleration, let's see where that drop is being felt. So across the spectrum, large cap, mid cap, and small cap, most of the equity categories have seen a dip come in. The dip in the large cap category is fairly pronounced, with the large cap funds pulling in under 1,000 crores in the month gone by. Something to note here, the flexi cap category has actually held on very, very smartly. Flexi cap funds have actually pulled in almost 9,000 crores in October. So investor preference continues to be for flexi caps. Just to quickly talk about NFOs, we've seen a very healthy offering on NFOs as well. A lot of these offerings are actually on the passive side, so ETFs or index funds, a total sum of about 18 NFOs pulling in a little over 6,000 crores. Last but not the least, yeah, that's the NFO picture that I'm talking about. Last but not the least, if we talk about the SIP picture, that is the biggest silver lining, because SIPs are steady, and now the monthly SIP inflow number is inching towards that historic milestone of 30,000 crores of inflow every month. We're just under that at about 29,500, but the SIP story is steady while investors are diversifying away from equity as well. Okay, so that's the mutual fund story. With that, let's quickly get back to the market. Alok Agrawal, head of Quant and the fund manager at Alchemy Capital, is joining in. Alok, thank you very much for being with us. I was just, narrating the highlights of the MF picture. But what's your sense? I mean, for the equity market, it's been very, very range-bound. How do you sum up the Q2 earnings season? And do you think the market will have the legs and steam to break out into fresh highs, in the coming few weeks or months?
Yeah, it has to be. Thanks for calling us here. And the earnings season has to be summed up as something very positive so far. About 80% of the companies by market cap in Nifty 500 have already reported numbers. And the aggregate earnings seems to have grown a little over 15% year on year. And this 15% number is the best number we have had in the last 6 quarters. So, and this is up till September. So the benefits of lower GST rates and the pickup of the consumption and the festive boom, that should be seen in the upcoming quarters. So we enter into this third financial year quarter with a much better numbers, and these numbers of 15% growth is much higher than the estimates as well.
Alok, but the wait for the clarity on the India-US trade deal continues. So ahead of that, and as we wait for that, how are you positioning yourself? Are you participating in the market? If yes, via what? Are you fully invested? Are you buying the stocks which could be potential beneficiaries of a trade deal? Or is there a defensive tilt to your portfolio?
So our portfolios are more tilted towards companies and segments which are likely to see higher visibility of growth, irrespective of the trade deal. So yes, the whole market possibly seems to be obviously waiting for this trigger of trade deal to go through. There are, looking at the sound bites, there are quite high chances that the question is of when and not if, and possibly in the days to come, we might have that deal go through. How much could be the final rate? That is anybody's guess. But it looks likely that at least the additional 25% that was imposed because of imports from Russia, the oil imports from Russia, that should at least go away. That's the kind of estimates that the market is building into. But in our positioning, we're not specifically looking at those names that could be the beneficiaries of that trade deal going through. For us, those which are having structural growth, especially domestic driven, they are the ones that are driving us, our exposures there, our overweights there.
Do you want to comment on Trent? And the other one is Bajaj Finance. Both big wealth creators for the market. They're growing, albeit at a slower rate compared to their own historical track record. Valuations, stocks have corrected. How do you feel about Trent and Bajaj Finance now?
Both these companies are actually the sector leaders, as well as they have kind of defied growth, what the whole sector was growing at historically. And for their supernormal profits, especially as compared to the whole sector, they were obviously given very high valuation premiums as well. But those growth numbers, as you rightly pointed out, have been slowly coming off from their historical trends. And hence the markets possibly seem to be adjusting to their valuations now. And the valuations still continue to be at premium. Their growth numbers are still better than the sector numbers. But the kind of higher growth, additional growth that they used to produce, those numbers look like a suspect now. That's the reason the adjustments are there. I do feel that some of our funds, we may be owning some positions in these stocks as well. But yes, they need to possibly have higher growth numbers to come through for those higher valuations to sustain.
Will you buy Trent or say Bajaj Finance at this juncture?
We would await higher growth numbers to come through. Currently, looking at the guidance by some of these companies as well, the growth numbers are still not looking as great. So possibly we'll want to wait out the period where the growth numbers start bouncing back to those higher trajectories that were there in the recent past.
What about some of these consumer tech companies? Again, there is growth, but valuations are expensive. Fairly expensive, many of them. In fact, there's some research which shows that I think 7 out of the 11 consumer tech companies which recently consumer tech companies, internet tech companies, have reported losses in Q2. Where do you stand on them? On those, that entire segment? Which stocks do you own in your portfolio? And which ones are you comfortable buying right now?
This is a great space when you look at the overall story and the overall addressable markets. But yes, as you rightly pointed, to find out real winners there, those which are not just winning, which are also delivering those profits, that becomes quite difficult. In our exposures, we do have exposure to the leaders in the food delivery and in the payment side, because both these companies have already started turning around. They've started reporting profits, as well as on the consumer tech on the beauty side. So these three segments, you notice that the turnaround has already happened. The profit numbers are already going through. But yes, for others, we might want to await their numbers to go through that cycle of losses. And once they come into the profitable side, and more importantly, here the winner takes it all. So it's very important for us to focus on the leaders only. And yes, the story and the distribution side, the whole tech side, on the consumption side, that looks quite set to do quite well. But we need those that can execute pretty well here.
All right. Hi, Alok. Good afternoon and good to see you, Ben. Nigel on this side. What about metals? Metals, the valuations come secondary. First, it's the sector with momentum. And some believe that you should stick to momentum. And if you've done that, actually you've made big money. Whether it's ferrous, non-ferrous, everyone's doing very, very well. Some of these ancillaries also are doing well. What's your view? How are you all placed on metals? It's a tricky space because China is yet to recover. But nonetheless, if you bought, you're making good money.
Yeah, hi Nigel. Yes, we are quite positive and overweight on metals, and both the non-ferrous and the ferrous side. The way to sum up would be like, if you look at especially the non-ferrous side, a lot of these metals used to have surpluses due to which there were higher inventories in the system globally. But what has happened, even the likes of aluminum, if you notice, roughly 60% of the market is controlled by China, and China has put a cap on the overall production. So, and they have reached that cap. So, 60% of the supplier in the world is not wanting to increase its production. Out of the remaining 40%, a lot of that comes from European nations who face a cost escalation because of higher energy costs. So, suddenly the incremental supply looks tighter in a world that is naturally growing, plus the geopolitical changes are such that the manufacturing is picking up, the electrification is picking up. So suddenly we find that non-ferrous metals like aluminum, zinc, etc., which historically had longer periods of being in surplus, now they trade at deficits. the inventory levels are coming down, and you see some important levels being broken on their prices globally as well. So the positioning in the metal space looks quite good. And we are overweight. We do see better times ahead for harder assets, especially the non-ferrous side.
And on the non-ferrous side, Alok, I believe you are playing that special situation, the demerger that's in the works, and the company that you could get access to zinc, aluminium, smaller parts of steel, as well as oil and gas. Is that the one, the large conglomerate?
Yeah, can add silver to that as well.
Yeah, Silva is there. Got it. All right. So Vedanta is the one I think that you're like. Just wanted to confirm that. You'll believe there's still more money to be made out here?
Yeah, absolutely. So it's a rarity that like you have multiple exposures to different assets like aluminum, zinc, and silver primarily, and all three being in an upcycle. And visibility on that upcycle looks quite bright from here on. So to that extent, the earnings growth visibility is quite good. So our positioning is on the positive side in these.
Okay, all right, Alok. And as we have seen in the past, it's now for Mr. Agarwal to go ahead and do something silly to lose this sort of an advantage. Otherwise, the company appears pretty well placed. But we have seen what they've done in the past. So hopefully, they've learned from past mistakes. Thanks a lot for joining in. Well, time to slip into a short break. As always, Nimesh is waiting for us on the other side. He'll tell us what's going on in dealing rooms. We'll also get you a couple of technical calls. Don't go anywhere. Welcome back. Well, the markets are at the day's high. We're at the crucial 25,700 mark. 25,725 for the day is resistance, going by the call action that we've seen at 25,700. Weekly expiry, last 20 minutes to go. That said, let's get in Nimesh. Nimesh, tell us, D Street Chatter, what are you picking up?
And actually, a sharp intraday recovery, right? At 12 o'clock, we were down almost 100 points, and now we're up 120 points. So, looks like I think market is sensing something in terms of the Bihar election. Today, by the end of the day, we'll hear the exit poll as well. So, I guess that's something which Street is anticipating. So, watch out for that. But in general, there is an expectation that after the Bihar election outcome, and post that, the anticipation would be in the US deal as well. So, these are the two important triggers I've been highlighting for the last couple of days. Having said that, from a flow perspective, even today, it's slightly negative is what I understand. And I've been saying for the last 2 days that there is selling in the broader markets from larger FIs, and that played out yesterday. And maybe today as well, there are selective stocks which are under pressure, even in a pullback market. Financials are a bit dragged today, largely on the back of that Bajaj twins. But interestingly, I was reading a note from Morgan Stanley. They put out a note in the afternoon. It's a tactical buy on Bajaj Finance, and they believe that after the 7% fall, it's a good buy. It's a good bet to buy. So a bit of contra view as well from Morgan Stanley on Bajaj Finance. As I said, of course, the Bihar election and US trade is important, but there is selectively buying happening in the PSU names. Today, for instance, auto stocks are doing good. Tech has seen a bit of a bounce back of late. So there is selective buying happening. But I guess the bigger move has to be on the back of Bihar election and the US trade deal.
Okay, all right. But there are plenty of stocks as well that are going to be in focus, and some large trades. A little bit of a drink in there as well. So tell us, which are the companies?
Okay, but that's not my first stock. My first stock is Deepak Fertilizer. That's been buzzing off late. There is the buying interest has emerged, is what I understand. And for that, a leading domestic mutual fund has been an active buyer, is my sense in Deepak Fertilizer of late. So that's the first stock. The second stock is Telecom. This is something which Nigel will be very happy to listen to. I mean, the stock has been consolidating of late, but I believe there's going to be a large block deal in Tilak Nagar after the earnings. So that's something to track there. The third name is Lodha Developers. There was a small block in the afternoons, and after that, you've seen a bit of recovery in Lodha Developers today. I understand from a buyer perspective, a leading family office was a buyer in today's block deal. So not sure there will be disclosures, but if there is, it will be interesting to see as to who sold. But it looks like a family office was a buyer there. And the last name is Eternal. Second time in a week, it's coming to my chatter list. I understand the selling pressure from a leading long-only fund is largely over. Some buying has emerged. There are buy flows today from larger domestic mutual funds. And maybe you'll see delivery-based buying as well in today's trade in Eternal.
Thank you very much for that. By the way, one more stock, Yatra. Strong numbers. The company's top line went up 50%. Net profit is up 95% on a year-on-year basis. And that stock has gained close to about 15%. Rocket in the last 10 minutes post the numbers. Mitesh is back with us for a few BTST calls. Mitesh, what do you have?
Yeah. See, on the BTST side, I think, very clearly with the market trading in the positive side, we'll go with the long call. So PI Industries is a BTST with a stop at 37.75 or maybe a rupee below that. Look for a target of around 38.15, 38.20 and maybe more if taken on a positional basis. And that about, I think, State Bank of India is a BTST with a stop at about 9.45 for targets of 9.60 to about 9.65.
Okay, all right. Thanks very much for that, Mitesh. More later. There's about 19 minutes to go for the market closing. The big talking point, as we've been saying, is the Bihar elections. So polling for the second and final phase of the assembly elections is underway. Will continue till 5 p.m. And later in the evening, we get exit polls. And of course, final results, the actual results on the 14th. CNBC-18's Pallavi Ghosh is now joining in with just the setup, the lay of the land in terms of how to look at this election. And I don't know if I can ask you the question, Pallavi, who's ahead or slightly ahead?
Well, I'm not going to take that guess at all, because one thing we can be sure about results is that one can never be sure about it. But there's a reason why the NDA think that they have the edge ahead. Because when I traveled extensively to Bihar, frankly speaking, I never saw a strong wave against Nitish Kumar. There was no strong anti-incumbency. Yes, in some pockets, there was a little bit of anger. But I think what could be the clincher for the NDA is of putting money directly into accounts of women. We are waiting for the Election Commission to come out with the final data about what really was a voting percentage of women versus the men. But if you look at those, data which we saw on the ground, you look at those queues up on screens as well, it's very clear that a large number of women came out to vote. And that is something which could swing heavily in favor of the NDA. The stability or a stable governance, that's also been a kind of a USP for the NDA. And in sharp contrast, this whole tag of, perhaps bringing in back the Jungle Raj days, lawlessness, or the Lalu Prasad Yadav regime, despite the fact that his son is now at the epicenter of the Mahagathbandhan or the alliance. I think that is something which makes many women wary, large number of young also wary, because what they're looking at is coming back home to Bihar and working there. And that's only possible if they get job opportunities. The private sector is only going to come in if the investments increase, and investments will take place only if there's a semblance of law and order, at least a reassurance coming in from the state government under the NDA that we are going to ensure law and order. With a double-engine Sarkar, which is the BJP or the NDA in power at the center, as well as at the state level, we can reassure you that there's enough reason why you should be coming back home. So the NDA is very confident, but equally confident is the other coalition, where we just have to wait for 2 to 3 days, or rather for our exit polls really for later this evening to get a sense of which way it's swinging.
Pallavi, thank you very much. That's an extremely sort of important bit to watch. With, of course, as we've been saying, we'll figure out. There's always sometimes this big difference between what exit polls say and what the final results are. We will see whether it's a wide spectrum today, this evening. But Pallavi said, I mean, in her travels, it looked like the NDA was doing well. We'll see what the polls show once the polling booths shut. Pallavi, thanks once again very much for joining us with that. Now, Bajaj Finance is, something we want to focus on once again. Stocks down sharply. Gaurav is here with just these numbers once again. Gaurav, over to you.
Well, yes, when we look at the numbers for Bajaj Finance, we were expecting good set of numbers. And if we look at the numbers, company has fairly delivered the same. In fact, profit that increased almost by 24% on a year-on-year basis. We saw net interest income and PPOP increasing almost more than 20%. And in fact, when we look at net interest margins, they remain flat. But what was negative is that the commentary. Now, remember, this is one of the stocks which is seen as a proxy to consumptions play. And specifically, given that there are multiple tailwinds of GST cut and rate cuts, we were expecting some kind of increase in the AUM. Now, when we look at AUM growth for second quarter, it was strong at around 24%. But going ahead, company has cut the guidance, AUM growth guidance, which was given at 24 to 25% to now at 22 to 23%. And the main reason why they are attributing this guidance cut is the slowdown in MSME and the mortgage segment. In fact, for MSME, they are expecting just 10 to 12% growth on a year-on-year basis for FY26. Second headwind that came in the result is that the asset quality. Now, when we look at credit cost, it fairly remains stable sequentially. In fact, company is saying that the guidance that they had given of around 1.85 to 1.95%, credit cost will remain in that guidance, but it will be at the upper end. But when we look at gross NPAs, we saw some spike coming up, and this was specifically again from the MSME segment. So it seems that the company is being a little bit pessimistic in the SME side, and that is the reason why when we look at brokerages, we did not see any kind of bullish notes coming up from brokerages. In fact, the tone of brokerages also became a little pessimistic. When we look at valuation, now this stock currently trades at around more than 5 times price to book if you look at the forward valuation. And given that there are some concerns about the growth, we saw Street did not take it in a good way. As we speak, the stock is down more than 5% today.
Yeah, it absolutely is. It's been down 6-7% with absolutely no sign of buying at the lows. So a lot of disappointment. The market was not prepared for some of these asset quality issues, and then therefore cutting back on the growth estimates. It was just not ready for this after a 45-50% rally this year. That's Bajaj Finance. Thanks very much for that, Gaurav. By the way, since we're talking financials, look at Shriram Finance. And look at the chart on Shriram Finance. Interesting, upthrust on it. Days high on Shriram Finance as Bajaj Finance struggles in today's trading action. Anyhow, for now, let's move on. Asian Paints is going to be in focus. Will it paint a nice shade of green or not in the second quarter? Let's ask Manglam. Manglam?
Well, the difference is the business and the stock. The stock has been painting a fairly good shade of green over the last few days. From the lows, it's up around 25%. The Street senses a change in sentiment in the paint space, especially given the competitive intensity. The Street believes is perhaps behind. The valuations also not very demanding as they were earlier. But just from a business standpoint, the second quarter has been weak because of heavy and extended monsoons, weaker product mix. The competitive intensity has still been high. We've heard that from Berger as well, and increased cost of sales. So all of that would bear down on the company's overall performance. But remember, the same time last quarter was one of the weakest quarters that the company had reported in recent memory. So on account of that favorable base, optically these numbers, at least on the EBITDA front and the net profit, would look fairly strong. We're looking at a 1% revenue growth, 7% growth in the EBITDA. Margins are around 16.3%. Remember, this is an increase year on year, but it's still lower than the company's own guided band of 18 to 20%. And the net profit on a lower base grows by about 25% as well. Volume growth of anywhere between 4 to 6% is something that the street will like. But remember, a disappointment this time around may not disappoint the street when it comes to stock price performance, only because they believe the worst is perhaps priced in.
Thank you very much for that. One person, Rakshit Hargave, has caused so much tumult in both the paint and the cookie industry, biscuits. Thank you very much for that. But Asian Paints in focus, of course, today on the back of the numbers. Jay Bala of cashthechaos.com is also joining in. Jay, for the markets, it's been one step forward, one step back. It's been largely range bound. What's the setup looking like for the near term?
Hi, Rima. Yeah, you're right. The market has been choppy and flip-flopping. But I still believe the markets are bullish, and we don't want to see a print of 25,153. As long as the market can stay above that, I think new highs are due. But if 25,153 were to come through, I would expect a revisit of the August lows, and that will delay the medium-term bullishness. But things are looking still positive in the short term. So we want to see Nifty take out 26,104 before it can print 25,220 and 25,153.
Got that. So the August low is 25,113.
No, the August low is 24,337. That's quite far off. So if 25,153 were to come through, that will drag the markets lower as a form of a correction somewhere to the August low. So that's the reason why 25,153 is very important. And if we can stay higher before 25,153 and it prints 26,104, we're getting record highs for the markets.
Stay on, Jay. Need to get into a break. We'll come back and continue the conversation.
Welcome back. Let's focus on Tata Steel. Comes out with a set of numbers tomorrow. And let me run you through the key points that you should be tracking. Top line consolidated growth of around 4%. EBITDA number should jump up by around 38%. And on a low base, remember there are plenty of one-offs below the operating line. It's expected to be a big PAT number. But the key numbers you have to track for Tata Steel. One is the India business. EBITDA per ton, 14,200. That's the important number. On Europe, well, $10 per ton is what we are working with out there. Let's run you through a few factors. For the India business, there'll be a contraction in realizations on a quarter-to-quarter basis, but there'll be some saving because of lower coking coal costs. So that works in their favor. Standalone volumes, though, will be up on a sequential basis by more than 15%. Why is that? In the first quarter, there was one of their blast furnaces that underwent a shutdown. So the benefit of operating leverage will play out there. Moving to the Europe business, well, they expect to report a positive number of around $10 approximately, which will be more or less constant on a sequential basis. Netherlands business, that will continue to power ahead because they'll start getting the benefit of the lower raw material cost, while the US losses will continue because of lower steel prices and higher costs as well. But you look at that asset together, Europe will be a positive number. Management commentary on debt, capex, demand trends as well as pricing is what we'll track. Tomorrow, Tisco comes out with its set of numbers. And since we're talking about Tata Steel, Jay, come in, tell us about the metal index. Where is that one headed?
Yeah, so the metal index was the first to hit a fresh 52-week highs along with the auto index, and it's still looking bullish. And the last time when I spoke, I said 10,000 area is likely to provide support for the Nifty metals index, and it did come there and it started bouncing from there. I think another set of fresh record highs are due for the Nifty metals index, possibly heading closer to 11,000 and beyond. So still positive on selective metals names.
Okay. Jay, a view on Bajaj Finance after a stupendous rally this year. I mean, today it's a result casualty today. Has it broken any important levels, or is this a dip that should be bought?
Yeah, see, the short term, it's just peaked, but in the medium term, it's got higher highs to come through. We'll look at important support in the region of 975 to 930. So this is a short-term peak from the July lows, but in the medium term, it's got higher highs to come through. So to answer your question, it's probably looking like a buy on the dip.
Let me extend that question to overall financials, Jay. I mean, what is the Nifty bank telling you now? Is that the best index to play? Is there anything else you'd buy in financials?
Yeah, I think we should shift our focus to private sector banks. The public sector banks have led the rally, and the baton is likely to get passed to the private sector banks. And the Nifty bank index, it's probably got higher highs to come through somewhere about 59,940 to 60,000. But the previous swing high is registered in October, November. That needs to be crossed, but it's looking quite bullish. It hasn't completed the final high it saw from the April lows. So the recent high that we saw in October, that's, in my opinion, is not the final high. We are looking for higher highs to come through 59,950.
You know, Jay, a lot of, as a technician, right, a lot of stocks going one way and then going the other way, completely opposite reactions day on day. And we've seen this play out over the last, take Newland as an example today. Look at today's reaction, look at yesterday's reaction, look at HBL, yesterday's reaction, today's reaction. And we're noticing this more and more. I mean, so you don't, you can looking at yesterday's move on HBL, you could make the case that maybe it's starting a fresh impulse move, etc., but smash today, right? So how would you look at some of this? Not for these stocks, but in terms of what's going on.
Yeah, see, the markets, these flip-flops are pretty important, although they look random. They register fresh net 52-week highs, net 52-week lows. In that account, these new highs and then flip-flopping still makes sense. So, that's the market breadth that's speaking to you. So as long as, they are clocking fresh 52-week highs and then pushing back lower on B results or any other bad news, it's actually still a positive as it contributes to the net 52-week highs. So we are looking for markets to, push higher as the breadth widens. And these are probably, a flash in the pan in the medium-term uptrend. So I believe these turbulence will get bought later on.
Just pulling out to the global scene, Jay, what do you see ahead for the NASDAQ? I mean, every day that debate just gains more and more momentum, right? Today we got to know that SoftBank has sold a huge amount of NVIDIA stock. They've cashed out, they've made a huge amount of money. But what next? Either on the NASDAQ or some of these Mag 7 stocks?
See, all major indices in the US are nearing a terminal high, but that terminal high is for the short term. In my opinion, I believe we are looking for a bullish reset for the US markets. The S&P is a good barometer, and that's a much broader barometer, houses tech stocks and the Mag 7 stocks. So I'm anticipating another fresh 52-week high to come to, or which will be a fresh record high beyond 69.20. But post that, we are looking for a sharp correction. But that, as I said, that will be a bullish reset for 2026. Looking into 2026 and beyond, I'm anticipating the S&P to scale 7,500 and beyond. But in the short term, post the next high beyond 69.20, I'm anticipating an April November correction that's about 38.2 of the entire move.
Okay. All right, Jay, just stay on. We'll quickly recap today's trading action, then come back to you. And the trading action has been on the bullish side, actually. The bulls have managed a 100-point rally, actually a 130-point rally on the Nifty. And if we talk about today's leaders, just in terms of the sectoral color, it's IT, defense, a little bit of auto, and definitely the PSU space. All of them have done quite well. So let's look at the Nifty winners then on the large cap screen. Mahindra & Mahindra, last hour flourish. The stock's up about 2.5%. On the PSU side, names like BEL, beyond the Nifty, something like a BHEL, Nalco, all of these stocks on the PSU pack, they've had a good session. Interglobe Aviation, 3.5% on the higher side. Then let's see what else on the Nifty worked. Adani Ports, about 2% up. HCL Tech, Eternal managed to come back today, 1.5% higher. And Bajaj Auto had a decent session, 1 to 1.5% on this stock as well. And the large cap giants like Bharti, Infosys, L&T, HUL, all of them kept chipping in between 0.5% to about 1%. On the downside, the disappointment really came in from the Bajaj twins, Bajaj Finance. We've been discussing that stock through the